Okay guys, welcome back to episode 20. So in this episode, I'm just going to go over the thought process that you should be having when using our strategy. So before you enter a trade, you need to determine the market environment. So are we bullish, are we bearish, or are we in a range slash consolidation market? So if we're in a bullish market, you should be saying to yourself, are the higher highs and higher lows present? So that would be consistent with a bull market. If the answer is yes, is price at or approaching a key support in that bullish market? If the answer is yes, is there a clear A to B leg? So is there a clear rally and then a pullback? Does the A to B leg align with a break of recent resistance? So where that A leg started, price should have gone up and broken through a resistance, created that B leg, and should start to pull back. Will the C leg align with previous resistance now turn to support? So that's where you're going to apply your fib from the A to B. Your C leg now should be aligned with previous resistance now support, and that's your ideal reversal area. Is the B to C leg displaying corrective structure? So from that B leg has been formed, is the B down to the C leg displaying corrective structure like we discussed during this video series? Is there a falling pattern? Is there any sort of bearish corrective structure? If the answer is yes, then you should set a buy limit. If the answer is no and price is paused or not really falling the way you've seen in the ideal example, what you should do is wait for price action, wait for signs of reversal price action, a doji, a bullish engulfing, something along the lines to let you know markets have now made up their mind. So when you're going into the bearish side, it's practically the same thing, but this time you're looking for lower highs and lower lows. If they're present in the market, yes, is price at or approaching a resistance? So on this time now, we should be looking for price to be at a resistance area. Yes. Is there a clear A to B leg? So is there a clear high that's gone down to a low and looks like it's going to start to pull up? Does that A to B leg align with a break of recent support? So like I said, that A to B leg should always be breaking something, breaking a support in the example of obviously a bearish market. Will the C leg, so when price goes from A to B, that should break the support. B to C should be pulling back up to that support that's just been broken, which is now going to be resistance. Is the B to C leg displaying bullish corrective structure? So have we got bullish patterns that like we've gone over during this video series? If the answer is yes, then you feel confident to set a sell limit at the 61, at the 66, like I've said before. If the answer is no, then wait for reversal price action. Again, the same thing. Either a doji, either a bearish engulfing, any sort of bearish reversal patterns. So when using this mind map, understand that this is just a backbone to the thought process that you should be having when using this strategy. As I've highlighted over, like I said, during this video series, I've highlighted to you our setup. When our setup has that yellow range where you see that's a previous support, price breaks it, or it's a previous resistance, the setup has to be consistent. You need to have a consistent approach to an inconsistent environment. So just keep following this mind map as closely as possible, and that's a consistent approach. The results may vary, so sometimes it may go straight through, sometimes it may not get all the way back up, but that's the inconsistency of the market. As long as your approach is consistent, you will get consistent results. So like I said, just skim over, learn this mind map. It will be accessible to all members anyway, so you can have a look at this over and over. You can even amend it yourself, what you feel like you want to add to it or take away from it. That's what the key to trading is, and becoming self-sufficient, that you be able to build off the knowledge that I'm providing, the information that I give. You take it in, internalize it, and then adapt it and tweak it so it benefits you and the way that you perceive the markets and the way that you feel best when trading the markets. That's where the long-term success comes from. So again, thanks for watching this episode and stay tuned for the next one.